Hello and welcome to today's free trading video and market analysis. I'm Kenny, your host, Senior Research Analyst with the MiniAnalyst.com. The first thing we're going to look at here is a chart of the market. This is the mini S&P 500 futures contract, front month in nature, looking at a last print of 1091. Actually, kind of a choppy day on this Friday the 13th. Friday the 13th day of November and 2009. Kind of an interesting day today. We had essentially a flat open and had kind of a fake out move to retest yesterday's lows. This is, of course, Friday, Thursday, Wednesday, Tuesday, Monday. As you can see on Monday, we were all green. These are our proprietary indicators, our intraday dynamics, the indications we use to gauge where the market is likely to head. Obviously, if the market is green here and you have a quadruple threat and accelerating bullish bias here, the market's certainly going to move higher. That's actually the case for Monday, which was certainly indication that once we didn't get a fill of this gap or even a retracement, that was a pretty sure bet that the market, given this underlying support of our intraday dynamics being all green, so a quintuple threat bullish bias, being the price technicals and trend as well, suggested the market was going to go higher and finish near the highs, which it actually did. Had a kind of a choppy day on Tuesday. And as you can see, just really tried to break above the high. Couldn't really do it on that day or on the early session, and kind of just chopped around for the rest of the session as you saw the trend flatlining. Well, why couldn't the market make it any higher? Well, as you can see, have a lot of red bars are actually below the trend right there, but as you can see, the underlying indications are certainly bearish, 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 quadruple threat bearish. You could really certainly sell this high, and certainly the move back, the bar back below, indicating the failure of this high, or at least a new high attempt, given this negative divergence and certainly the bearish indications there on Wednesday. Here we saw another bull trap, essentially. We had a gap open, a little bit of a shallow retest, a little shallow fill, I should say, about a half fill and a retest of the prior day's high. We did have some bullishness here, bullish, quadruple threat bullish, but really the price technicals weren't in favor, as we just had a rollover, a complete rollover, to suggest this was a failure, a bull trap, actually. But there were some underpinning indications to suggest that the market would move higher. I mean, this is a pretty textbook retest of the prior day's high, half gap fill, and blast to the upside. And we actually did have some underlying indications, although they weren't particularly impressive. They were there, but as you can see, the market just fell into a funk for the rest of the session and just chopped around for the rest of the session. We go into Thursday, and as you can see, we had kind of more choppiness, lower high right here, just all over the trend right here, just expansive range compared to the late session of the prior day. And as you can see, the bearishness really fell into the fore right here. We had a break back below the trend, a lower high right here, and quadruple threat bearishness right here. So certainly short indication right here, and took some discretionary short exposure right here, actually around 1092, because it was just too nice of a trade setup. And of course we went all the way down to around 1083. 1082.50 actually, and closed. Had a little bit of a bounce there, but closed essentially near the lows of the day. And of course, we go into Friday. Today, more choppiness, kind of an expansive range. But as you'll notice, we did, as we scroll in, we did have kind of a choppy session. Then we had a break up, and then what appeared to be sending all the messages to the market that this thing's breaking down. I mean, this was a high velocity breakdown, but it was just a fake out. As you can see, it was just a retest of the prior day's low, and we've made all the inroads back to the upside and even turned some yellow bars into green right here. Why is this happening? Why so much choppiness? Well, as you can see, there's a very strong divergence here amongst this primary indicator. We have extreme bearishness here. This is, of course, bullish. Nice divergence is bullish, but it's not particularly impressive. But it certainly was enough in concert with these two indications, along with a break of the trend. And as you can see, a nice V bottom, and breaks to the upside. But where do we go now? It's really unclear in terms of the intraday. But if you actually do look at the kind of choppy again, of course, the intraday, but the bulls are certainly outweighing. I mean, we have an uptrend, we have the price above trend, we have some green bars, and we have a triple threat bullish bias. So obviously the bulls, in concert with this double bottom retest of the prior low, the bulls are weighing out. This happens to work well with our official market timing bias, which remains bullish after this retest and dangling participle, and reverse to reclaim the very key measure of trend following resistance right here in the blue line. Certainly has remained bullish. Our indications remain bullish. We have no reason to move to the bearish side. Certainly below a low of 1030 would be bearish. Neutrality comes below 1050. So 1050 is neutrality. As long as, of course, we'll move to two consecutively lower closes may move us to the bearish side, but as you can see, we could have a nice retest of the very round 1000 level. But if we get down there, it's kind of we'll have to gauge the market once it gets down there. Right now we're trying to get above the 1100 level. We did mention a beautiful head and shoulders formation that might set up around 1070, and we did anticipate that, but this blast higher on Monday essentially negated that setup. So right now the head and shoulders set up the trend as your friend, and it has outweighed, and we do remain officially bullish on the market, again below 1060 to 1080, and we'll move to neutral, or at least looking at the neutral phase, two consecutive lower closes. We'll move to officially neutral. Below 1000 we'll likely move to officially bearish. In terms of momentum, the bulls have reclaimed all the momentum, the intermediate term as well as the short term. And in terms of directional movement, the bulls are trying to reclaim the intermediate term, but the short term is still bullish as well. So that's a look at that. We actually have our most recent quarter performance figures updated. They were scheduled for the 15th, but we had a webinar on Tuesday and got those rushed up, and actually our numbers are available right on the home page. As you can see, just go to www.MiniAnalyst.com and scroll down to 2009 portfolio returns. And this is actually a video, a look inside. That's a recording of the webinar that we did on Tuesday. So you can check that out right there. And that should actually play automatically. So there you go. But more importantly, as of November 1, technically I guess the 30th of October, but as of the first of the month, we have our most recent quarter, which is August, September, and October. And as you can see, it's been another banner month for the MiniAnalyst.com. And what's more important, this is the MAPDT 150. You could still go and look at all these rankings. Not much has changed on the rankings for the tables, for the rankings. But what's kind of important about this, not only has it been a pretty good quarter, another good quarter ending October 30th, but as you can see, our drawdowns have been significantly decreased. You see certainly higher lows in our drawdowns across most of our portfolios, suggesting that the risk is really being mitigated. And as you scroll down, you have the Map Black version 3.0. You can check out the average monthly returns. Again, making very nice money. Actually gaining all three of the last months. And again, higher lows in terms of our drawdown. These are our drawdowns, as you can see, and that's the equity line. And this is the monthly profit or loss that you can see. We actually have a Map Black 50 now. Have introduced that. For just a $50,000 account, you can trade that portfolio. It's very aggressive, although of course we are risk speculation, and do have a lot of people who are interested in higher risk and higher return. Of course, the return has doubled at 1,850%. And there's a Swinger DT 4.0 putting up a nice month in October, a very nice month in October. And of course, you see higher lows again in the drawdown. So you can just kind of scroll down and take a look at these portfolios. There's all of our MAPDTs. MAPDT. We actually have a special right now on the MAPDT version 4.0 HR, which is right here. You can just go to the website and click right here to subscribe and enter promo code 4.0, and you'll save some money on that. It should be a surprise. We hope you enjoyed the video, and if you have any questions, go to the website, chat with the support team live, or shoot us an email to admin@minianalyst.com, and we'll see you next week.